All right, so I'm starting this off here. Little video for tomorrow, but just to kind of review of today's markets. I was just starting up. Futures are going to open up here in about 5 minutes, 6 o'clock. And pretty interesting day when we're going to look back at the setups today. And when I talk about the setups, I'm talking about trading the divergent style, trading, scalping the MES. That's what we've been focused on a lot. So I'm continue to point out those opportunities in the market. And some of these opportunities were just so good today. They need to be reviewed so you see what you're looking for. All right. So that's what I'm basically going to do right now. This was going into yesterday and then overnight. And again, I'm seeing these setups happen overnight also. And so it's really exciting to be, hopefully we get a setup tonight. I wouldn't mind. I'll probably be here until about 10 o'clock tonight. So if I see any, I'm here. I'm not like I'm here ready to trade. If the market's going to open up, I just don't see volume in it yet. I don't see volume when it opens. I don't see it going to happen too much. I mean, it kind of died out before the close. We'll see what happens. But here we are overnight. Just some of the rules that we find. Seeing that channel is half the battle. That's usually, these are the tracks, and this is you finally get to the end of the trail, and that's where the divergence is going to be. It stays within these channels until we have a divergence, and that gives us the line. That's the higher low and the lower low, and that usually always takes us out of the channel. So that was a textbook one, and that was 9 o'clock. So I mean, that was 9 o'clock. That's a nice little move up. And then again, here we have. I went over this today during the show, but I want to point out the 44. I have the 44 on my stochastic bands here. It goes from 9.3, 14.3, which are kind of the original, real deal parameters that we could use. And then 44 and 60-10 are two that I came up with over the years of just doing testing. And what I've done, I could change these on the fly and actually mold them to the price. And what I've been doing is trying to mold each time frame so we have multiple time frames that line up, and we have those all three. And we had a great example of that today too. It was a fantastic. We were just waiting for that 60-minute. I'll show it to you in a bit. But here you had that 44 divergence, a really clean one. And when they show up on this, it seems like it's a perfect time frame. It doesn't show up too much. It doesn't show up too little. It's just right. It's the Goldilocks of the time frames. But I don't use it that much, except if I see a divergence on it. If I use a divergence, 9 times out of 10, you want to be in that trade. Now this was, again, relative divergence, double bottom divergence. It's all relative when especially it comes to the height of the stochastic rotation. And you start to see that. It's an obvious rotation. Even after that first candle, we're oversold in the divergence. So that was key. And this one was another nice one. And this is another 44 and a 14.3, a very steep 14.3. Look at how high this was. And look at this price came down underneath the previous low, or at least matches it. But the 14.3 held up really, really good on that. And that reversed. So you want to keep both of them. Lots of times, the 14.3 is a better one to get the divergence on. This gives you a little bit more opportunities, I believe. It's a little choppier. It's a little faster, the 9.3. So I kind of use these two together. I'd like to see the divergence show up on both of them. But if I had to pick one and just go, the 14.3 divergence, when it does set up, tends to play out more consistently than maybe choppiness that would come in with this one. Futures are open. I'm hearing the crickets coming into the market. But we'll catch up to that. So that happened at 3 o'clock in the morning. Number one time tip. 3 o'clock is a great time to trade for these divergences. As the European Open, there's always something going on. It's either going up or going down, and it's usually giving you that signal. And this signal was a buy signal that it was going to go up. So you had that big, nice move up, and then you had this. Look at this big divergence here. The lower low. This was the high. This is the high low. It was a big, huge divergence. Oh, it was crazy big. And then all the way back down here at 7:15 in the morning, started. I think I was just walking in. No, I wasn't even up then. No, I came in at 7:45. Then I already came in. I kind of noticed this one. There was a decent divergence on a 9-3, holding probably just on that 20 line, but enough for me to see that it was a pretty decent angle to that. And it kind of got up, and then it kind of pulled back that 50% mark where you look for that first pullback if there is a good. And then it kind of went a little higher, came back. There was another micro divergence between those two candles. It was hard to see, but you could see that. And I could see it just using the I would not have that crossover lines going. I would get rid of your percent K, your percent K lines, and just use the percent D lines as your signal line. Because you don't want those crossovers. There's no need for those. The divergence is it. That reversal candle. That's a little harder one to recognize, I would say. That's a more difficult one to recognize. This one, I would actually say, did not really work out too good. I mean, we kind of had this fast trip lower, and then we got back up to this trend line, and then kind of chopped around for a long time here, back and forth, and finally we broke down and then came back and eventually went higher. But this 14.3 didn't. But at the same time, that 14.3 was, we weren't seeing anything here. It was choppy here though, and it was almost it was almost like a. You see what happened here? The market was actually holding up pretty good here, and they almost like kind of just went down, grabbed something, came right back up, held it, and off to the races. It was really just a quick move down, came back up, and then retested it one last time, and then off to the races. It was a little harder trade. The 2020 bull flags were there. That would be the second trade that you want to take, especially in a trending market. So we watched this one while it was happening. First pullback, got oversold, held above the 80 line, and then boom, right off of that. Then you had another one kind of here. Oh, this was a nice divergence. It was a lower low, a much higher low on this. Look at that how high that is. And look, that was not much of a pullback, but that was the amount. That was the best position to get in. If you missed this and you needed to get in on the pullback, this would have been your best setup right here, and that was a divergence. Market took off here, started coming back down. Another steep divergence right here on the 14.3 and the 9.3 right here, and that had a nice run up here. I think we're in this. One of these. That went right up to the trend line. That put in our 1, 2, 3 channel. 1, 2, 3. Came back down. A bear flag. Same thing. We talked about the fast rotation. This staying under 20. Underneath the 20 period moving average. Drop off. Bear flag. And that was pretty much about it. I mean, we did have a little divergence here. And then it popped, pulled back, double bottom. I think there was a 5-minute there too, actually, right here. This was actually a nice 14.3 here. That's a nice 14.3 right here. Wow. So there was some good opportunities today. Some of these moves, 4,500 to 4,510, 5 to 10 points on most of these things. Not that you're going to get them all, but you have that upside. Very little downside, very little pressure, very little drawdown in the trade. Very little. If you only took the pure divergences. How could you not now, after seeing that? when you see all these setups and they're moving, especially with the with the reversal candle on the lower trend lines, it's like we got to just be there.
Connection lost.
We got to be there. Market here actually popping now, opened up, and we are popping up 850. So when's the number? Is it Thursday? The big number we're watching? Was it the CPI number coming out? There's a chance that the number could come in better than expected, I think. When are they expecting a peak of this inflation? Thursday, right? It's Thursday. I mean, aren't they expecting a peak in the inflation here over the next couple months? What if the readings come in and it's like better than last reading? The market explodes higher. I think that's worth a gamble. I'm not seeing any inflation. Tomorrow, Bain. SMTC tomorrow. That's what that was the last I read. That's the last I read. I haven't checked anything on. Yeah, that's what I'm thinking. I think it's going to come in. Well, I mean, I don't know. You would hope. I don't even know how they really can count on that. Market here pushing higher. But that's going to be my guess tomorrow. My guess is that it's a little better than expected. The market rallies off the number. Market here still pushing at the highs right now. I'm just talking about volume in the market. You can see here at the close all that volume. And then look at here. It's so hard to even see a candle. This video is almost about done. I just wanted to look at that for the market radar type of part of thing. Here we're looking after hours. Not much here moving after hours. But let's just go back to the SPX here one more time. Just going to point out it's a good old trend line, even though we went through that back. Let's take a look at this 5th hourly. All right. Yeah, right here. This one that came right down through this two big pivot areas, then right through here, and we kind of got right up against it today. Opened up right at it, got up to it. I should say, got up to it, and then pulled back a little from it. Stochastic still look pretty good. I think if we get through that line, that's I think that's pretty significant in a way that's closing into. It's going to start to close that gap too. So you have some upside. The 45.40 is the big number. Trying to get above that series of candles up there. You can probably adjust those down a little, but you know what I'm looking at, right? So maybe it's about 30 points away. Like to say, we get through that. That's, then we had that big trend line down at 46.50. If does even want to count that, but that'd be pretty impressive. Below us, we have this rising trend line from these two lows. Bigger wedge pattern, bigger patterns all over the place. And this is a significant area to get through this trend line. I mean, if you start to fail here, there's a lot of, you can come down here. I think tomorrow's going to be an interesting day with this. And you know what? Thursday is probably going to be the interesting one. And again, my prediction, better than the expected numbers. Market rallies on those numbers. The fix is in. Market's here pushing the highs right now, and the market knows that. The orange juice report has been compromised. All right, hope you enjoyed the video. A little update what we're going to do tomorrow. Continue to identify and trade these top three setups. The top three, the divergence. The number two would be the bull and bear flag, the 2020 bull bear flag. And number three, if you're not sure on that, is the triple stochastic rotation. I was going to show you that one here. Actually, I did point it out here. It usually comes after a nice pullback like this. Market's pulling back, pulling back, pulling back, pulling back. And we have our faster stochastics are doing what they're doing, chopping around, back and forth, back and forth. The key here is that 60 period. It took from the top here to get all the way back down to a good level. It took, it took a while to get this rotated all the way nice and steady to get down to there, or right to that 20 line. Right when that 20 comes into play, and the other three come into play also, because they will rotate fast, and they will eventually line up. That is an absolutely great, setup. So you should look at trading those setups too. So the divergence, triple stochastic, I call it the triple stochastic, but in this case it's all four stochastic rotation. The bull and bear flag, the divergence. So those three, that's all I'm going to be pointing out. That's all we have to trade. All right, I'll see you guys in the market tomorrow morning. DayTraderRadio.com.